What's good, y'all? Today is a great day. We banged on NQ and we also hit top 10,000 in the world in Clash Royale. I'm not gonna lie, I gotta be like top 3 Clash Royale playing day traders. If you know anyone else that can hang with me, comment them below because I gotta check it out for myself and see. But, anyways, I'm basically just gonna go over my trade recap for today and then also give you a little bit of sauce on how to trade all time highs if you haven't traded all time highs before. So, there are two main things that I want to talk about today. I guess kind of three, but the first one's going to be quick. And that first one is our bias. When we're at all time highs, I have an inherent bullish bias, especially as a continuation trader. I'm not looking for us to reverse. I want to continue that all time high sentiment and just keep going higher and higher and higher. You know, NQ and ES are inherently bullish. They always go up over the long term. Obviously, there's retraces, but we want to look higher. So that's the main thing. First thing. Second thing is you want to be careful what you target. I will show you how that ties into the example today, but you definitely want to have conservative targets because when we're at all-time highs, you don't have any liquidity for a price to reject off of. It might just start rejecting once it's overextended enough. So we will get into the third thing in a moment, but first I want to kind of show you the trade recap for the day and how this ties in. So to start off, we have this 5-minute gap that formed coming into the day. Like I said, I was bullish. You'll see we have a ton of small gaps that are getting respected. If you just look through this, a bunch of 5-minute gaps getting respected. So in theory, we want to form another leg of bullish market structure and then form a bullish fair value gap, retrace into it and push higher. So play the next candle. I'm going to give you guys a little spoiler. We did not retrace into this gap, unfortunately. So I still think you can take a good trade here, but for me to catch an A plus setup, part of my continuation model, I wanted this to get retraced. Unfortunately, it did not. So I did not take this on my top step accounts. That's where I take my A plus setups. I had to take this on my alpha account, which is where I'm starting now to take slightly higher risk trades, just based kind of more on intuition, but still on my continuation model, just a little riskier. So for this, like I said, unfortunately we did not catch an A plus setup, but there was still a really good setup that came out of this. And with this here, you'll see we're forming bullish market structure. Obviously we had it on the 5-minute, so it's going to look pretty bullish in the 1-minute, but although it's not the cleanest PA of all time, there's a clear trend here. We're going up, retracing, going up, and then retrace. And on this retracement leg down, you'll see that we formed a small fair value gap here. And like I said, ideally I wanted this gap to get retraced, even though it didn't. If we inverted this gap, we could definitely take a trade off of this, assuming that we would continue this kind of uptrend and then retrace, uptrend, retrace, and then uptrend and follow the continuation. So spoiler again with that, we did inverse this gap nicely and I took my trade out of this. Off this candle close, I was ready to go for my alpha accounts. Like I said, at this point, I kind of just closed my top step and assumed I wasn't going to trade that today. So I was looking for something a little bit more, maybe not A plus, but something that still looked good, and this looked good. So in terms of a target, that's, like I said, the second thing about all-time highs you want to pay attention to. You want to be conservative with your target. We don't know what's going to reject off to the left, so you kind of have to be a little bit subjective with it. If we're at all-time highs and there's just so much volume, maybe you can try and look for something a little bit bigger, but in this case, not a ton of volume. Like I said, it was a clear trend, but still not super clean. A lot of the time when I am at all-time highs, and just in general, I'm not looking for really more than a 1-2. Even a 1-1 can be good at all-time highs, but you just want to make sure that you're not putting too much risk on the table for a 1-1. You know, if we're not super bullish at all-time highs, you don't want to be taking a stupid trade. So, like I said, for this case, a 1.5 was what we went with. Just looked like the most reasonable target for me. And more importantly was our break even. I generally am going to go break even at the previous all-time high, because at that point, when we hit the previous all-time high, we might just reject because eventually it has to retrace. So if we do hit the previous all-time high, I want to at least be risk off at that point. Or in this case, it was also just an internal high, so I would normally go break even around there anyways. So this was a great break even. This was the most important thing. The target is a little bit more arbitrary. It maybe could have been a 1-2 or 1-1. It didn't really matter, but I just wanted to make sure that my risk was off by the time we hit that previous all-time high. So that was the most important thing for this. But anyways, if I play a few candles here, you'll see that boom, we ended up hitting that break-even point. So that point, no more risk, and we're just assuming hopefully we're going to keep heading higher and then hit our semi-arbitrary TP, and then hopefully not get stopped back out at break-even. So boom, if I play a few candles, you'll see that we were just continuing higher, and this one ended up playing. So the third thing that I want to talk about when it comes to all-time highs is making sure you're taking your trades off of a retrace. In this case, obviously a retrace was able to get me a good entry on this trade. I was able to have good confirmation off this IFVG and then get a low entry on the chart. But you definitely don't want to FOMO into trades when we're at all-time highs, because knowing that you have an inherent bullish bias and just thinking we're going to push higher, you can easily FOMO into really bad entries. So for example, off open, if you were just seeing this really bullish market structure, you might enter a long like here and just think, oh, I don't need a retrace, we're just going to keep going up because we're at all-time highs. And depending where you put your stop loss, you might put a fixed 20 point that would have got hit. A lot of people try and hold tight stops because they're not comfortable with the risk, and especially trading minis, they don't like the risk. So 10 points, 20 points, whatever, you would have got stopped out. So you definitely want to make sure that you are waiting for retraces. Even though we're expecting incredibly bullish bias, we want to get good confirmation, and that's going to come from those retraces and the invalidation. So in this case, like I said, good invalidation of the retrace, and that was able to get us that good entry. So like I said, main three takeaways. If you've never traded all-time highs, those are the big three. You want to wait for those good retraces because you don't want to try and FOMO and then hit the top of the trend and get messed up on such an easy day when we're going higher. Number two is you definitely want to make sure you're having a conservative target. You don't want to be targeting too high because there's no liquidity for us to reject off of, and we could reject at any point. And then number three is you kind of want to stick true to that bullish bias. You don't really want to look for too many shorts when we're that high up and we're looking to push higher. You want to be careful how you try and short the market. You might lose your mind and blow your account by sitting there spamming shorts at all-time highs. Anyways, that's going to be the end of the video here. Just a quick little trade recap. If you did make it through the whole video, I appreciate you watching, and hopefully if you've never traded all-time highs, you learned something from this. And be careful this week. We definitely have some rough news. There's FOMC on Wednesday and probably rate cuts, and it looks like we're probably not going to have the best week ever, at least until then. So be careful with your trading for the rest of the week, and like I said, thank you again for watching.